It's January 28, 2025, and the IRS has just opened up their system to accept e-filing on Monday, so yesterday. For us, this time of the year, we're really focused in on making sure we have all of the entities for all of our clients. Most of our clients have been with us for at least 2 or 3 years, and so the first thing we do is send out what we call an entity confirmation. And so what that means is we send the client an email listing all of the returns we did for them in the previous year and anything that we might be aware that they have that came about during interactions throughout the year. So then what we do is we send a list and say, hey, did you add any more entities? Because if you did, we need to make sure that we file extensions. Most of our clients go on extension because they don't get the K-1s for their partnerships or other entities until September, or we'd like them to get them really by August because then it allows us time. But if not, they'll get them around the 10th of September. And then, it's a mad rush to get the returns done. So what we do is we input everything we possibly can into their return by August. And then when the final K-1s come in, it's pretty much just dropping in those numbers. So right now, we're just doing the entity confirmations, and then we're doing filing extensions for the business returns. Those are due by March 15th. After we get the business returns in, then we work on putting in extensions for the personal returns. Again, as I mentioned in the previous video, it's really about how it all comes together on the 1040, on the personal return. So right now, it's really all about collecting all of the entities. We did have an interesting situation where a client, his previous return hadn't been done. The 2022 return has not yet been filed. And for me, this presented such an amazing opportunity for him because we're able to go back and file and get cost segregation studies done on his 2019, 20, and 21. So instead of just filing his 22 return, we're gonna amend his 21. Now, if his 21 had been filed, the depreciation would have been completed, and then you would have had to do 22, and we would never have gone back to 2019 if his 22 had been filed. So this presented an opportunity that he can really seize and really work on reducing his tax liability for 21 by using his real estate from 19 and 20. So every time there's a new client, we look to see what opportunities are there to really impact the return. Now this individual, he has been doing real estate. He's been active in real estate forever, but his existing CPA hadn't been doing the cost segregation studies. So for us, it's like, sure, and this stuff is what gets us excited, really, when we're helping our clients and really seeing how we can impact their lives. And so here we are with this individual. So we're working on that for him. And of course, we're gonna quickly try to see how we can get his 22 and 23 filed so that, the penalties, etc., get reduced. But again, it's that time of the year. So from here on through April 15th, it's gonna be extremely busy, making sure we avoid penalties for our clients and those who wanna get filed early. A few of our clients do wanna get filed early, not many, maybe 5 or 6. The rest of them wanted to extend into usually the summer. So we're gonna be busy all the way through. Not as stressful after April, but then it picks up again. One of the other things that we do at this time of the year is we make sure that we get our clients' estimates so that they can pay their taxes. Remember, your tax return can be extended, but your payment cannot be extended. So if you don't make your payment by April 15th, then the IRS will administer penalties and interest on any amount that's due. So it's extremely important that you get those estimates calculated and the payments made by April 15th. The other thing to remember is that some states, there are very few states, but I know New York is one, that requires that you file an extension directly with that state. The penalties for New York are high, so you really want to do that, get that extension in. If you don't get the extension for New York, it's the penalty is up to, I think it's 5% a month, up to a total of 25%, I believe, which is a big number. If you've got, high numbers out there, you really want to make sure you do that. If you're interested in working with us, come. We work with clients who we coach. So we would spend time really working with you, coaching you on what you need to do throughout the year, so that by the time the tax return comes, it's really a slam dunk. We just drop the numbers in and we're good to go. If you want to work with us, there's a link in the bottom. Go ahead and click on it and schedule some time to talk.